Welcome to the Daily Insights That Matter. The latest CII Business Confidence Index for the October to December quarter rebounded to its highest reading in almost 2 years to 67.6 from 62.2 in the previous quarter. Now, this reflects optimism around India despite the rising global uncertainties. Now, the index's rapid rise was aided by a reduction in fears about an oncoming recession and its influence on the Indian economy on the back of easing inflation. Now, recent data of India's retail inflation has considerably eased and is within the comfort zone of the RBI for the second straight month. Now, the CII Business Confidence Index is a measure of the overall level of confidence amongst Indian businesses. It is based on a survey of industrial and business leaders and reflects their expectations for the economy and their own companies in the coming months. Now, the respondents' optimism originates from the fact that 86% say that the government's focus on infrastructure is the most important positive for the Indian economy, followed by improved tax collections and a healthy consumption recovery. Now, the government capex push has been spectacular this fiscal year, even while private capex has lagged. Now, the GST collection too have been phenomenal. So what's noteworthy is that 90% of the respondents believe that their company's investment cycle will improve in the next fiscal year despite headwinds. Now, around 73% of the survey respondents see only a moderate impact of the global slowdown in India. Now, despite facing headwinds from tightening financial conditions and the geopolitical tensions, the Indian industry remains optimistic about the country's economic resilience. Now, this is evident from the positive index readings, which indicate a belief in the strength and stability of the Indian economy. Despite the challenges, the industry continues to have faith in the country's ability to weather the storm and emerge stronger on the other side. Now, the most awaited results of the key Indian IT companies were out last week. While most companies did better than expected, today we will dwell upon the attrition rate, which is one of the most significant factors apart from the earnings of these companies. Now, the attrition rate, also known as the churn rate, can be defined as the rate at which employees leave an organization from a specific group over a particular period of time. Now, the attrition in Indian IT companies continued to moderate. This trend had started in the last quarter. Now, all four companies have seen their attrition numbers decrease. Infosys reported an attrition rate of 24.3%, followed by HCL, which reported an attrition rate of 21.7%. TCS and Wipro reported an attrition rate of 21.3% and 21.2% respectively. The attrition numbers are still high on a year-on-year basis. IT companies have been deploying several policies to reduce the attrition rate. This can be seen in the meaningful moderation in attrition rates on a sequential quarter-on-quarter basis. We will analyze the Q3 results for the IT sector in our upcoming Third Empire episode. But for now, while the attrition rates have slightly moderated on a sequential basis, it still remains at elevated levels. While we keep our reservation on the attrition outlook, some factors that could pull down attrition include the looming economic slowdown, the employee retention initiatives taken by the IT firms, and the slew of layoffs by startups and e-commerce businesses. So what does all of this news mean for you? Business Confidence Index is an important indicator as it helps us understand the state of the economy. The economic optimism of India Inc. and the resilience of the Indian industry is a positive. However, the Indian economy is not completely immune to near-term macroeconomic headwinds. Therefore, this will have an indirect neutral impact on you. In the second quarter, the attrition rates of top Indian IT services companies showed that it is moderating on a sequential basis, but they still remain elevated around the 20% levels. This will therefore have an indirect neutral impact on you as well. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.